and welcome to the Payments Leaders Show. I'm your host, Adrian Evans, and as you know on the show, we're really about going around the whole of the payments ecosystem and trying to take multiple lenses. So I'm very excited today because our guest, who is Aman Narang, welcome.
Thank you. Thanks for having me, Adrian.
Our pleasure, our pleasure. The reason I'm so excited with Aman coming on the show is because he's worked for a variety of and has different lenses around the ecosystem, having worked for big tech, having worked in startup, and also having worked for a large banking as well, multiple banks actually. So it's that multiple lens that I'm really excited about today. Excited about some of the subjects, some of my favorite subjects within payments, like embedded finance and like mindset. More of that later. But without further ado, welcome to the show. And I wonder if you could share with us to start with a bit about your background across those three areas of the payments ecosystem.
Yeah. So, Adrian, thank you for having me. And if I could start with, I think Steve Jobs once said, "You can't connect the dots looking forward, but you can do them looking backwards." If you look at the story of my career, it did at the time seem like a series of very random decisions. In hindsight, makes sort of feels like perfect sense. To quote my daughters and Taylor Swift, I've probably gone through about three or four eras, and I'll just recap them. Uh, so the first one, Adrian, was about learning the beautiful basics of banking. I began my career in 1999 at Standard Chartered in London. I was very lucky working early on, uh, having direct interactions with visionary CEOs like Rana Talwar, Mervyn Davies, and Peter Sands, who were really
Okay.
involved with shaping banking. I started in corporate banking, but pivoted to investor relations and group strategy, and it really exposed me at a high level to decision making and taking substantial responsibility with relative inexperience. Um, I did things like manage a secondary listing in Hong Kong, do crisis communications
Okay.
during 9/11. And after 6 really intense years, I took one of the first of my 3 career breaks that I took in my life. I went to business school to INSEAD, and I discovered two loves, my wife
Good.
and the
Okay.
internet, in that
Okay.
order. The digital world was exploding, and I knew I wanted to be a part of it. And so that sort of gave rise to the second era that I got involved with the whole fintech space. I returned to Standard Chartered, and after a stint in leading acquisitions in Korea, Taiwan, Pakistan, I got down to the business of trying to get the job I really wanted, which is to run internet banking. I was told I was too young, and I had very little experience in technology, both valid points. So I went and worked for the chief of staff as the chief of staff to the CTO. Eventually got my dream job, but it was not sort of a glamorous job because nobody else wanted to really do it. It was broken. And over the next 6 years, we took an internet channel from breakdown to breakthrough. We 10x the customer base to 5 million customers, added 25 different markets, launched really pioneering rich mobile experiences, first of a kind sort of payment partnerships in Africa with M-Pesa, in China with Alipay. And really we started to champion enabling technology like cloud,
Right.
and real-time credit card applications. Look, there were lots of awards. We won the best internet bank for 5 years globally. But really, the unlock for me there was the discovery that good tech is really, really important and critical. We'll come back to that later, I think,
Yeah.
in our conversation. But what is really important to have mission-oriented teams, that makes the real difference. And I discovered something about myself is bring those teams together was my superpower. So
Yeah.
that sort of led to the third of 4 eras, and I started in big tech. But before I started in big tech, I had spent 15 years at Standard Chartered. I'd gone from grad to dad, and I made the really tough decision to leave, and that I had to learn, I had unlearn, sorry, real lots of things about big company habits. And then, essentially, I had a series of failed entrepreneurship efforts. I joined a Sequoia-backed startup called Bank Bazaar, which ran out of money. I joined Schroders to work with them in Alibaba and Financial on a wealth platform. That didn't come out all right. But at the end of this, and we can come back to this as well. Google came calling, and as they say, when you get a seat on the rocket ship, you don't ask where. My
Okay.
seat turned out to be on Google Pay. So the story continued, and I led the expansion from India to Singapore, and priming a US launch. And what we did is, I've always wondered up to that point, what would it be like to serve 100 million customers? We did. We served nearly
Wow.
150, added over 150, and at peak we were processing nearly a third of India or Singapore's domestic payments, which was crazy when you think it's coming
Mm.
from start. Um, that brings me to the last of these areas, and COVID hit, and I really started thinking about what I wanted to do next. And Google gives you this sort of real pushes you to think audaciously, and I'd gotten really interested in small business, and HSBC came along and said, we want to build this embedded finance business, and we want to scale through technology and partnerships as opposed to RMs. And I knew that the challenge was about overcoming legacy mindset.
Yeah.
What I'd call the big five challenges in banking: onboarding, credit, servicing, product, and infrastructure. But 3 years later, we realized that a global rollout was too ambitious,
Okay.
given HSBC's in structure. So I decided to take a step back, and I'm here. I've just finished my first real summer off since university, and my
Yeah.
third dry run of at retirement. So we'll see how long that lasts.
Excellent. Excellent. Well, thank you for sharing the breadth of experience. I'm really looking forward to diving into that in more detail. So tell me why it is that you're so passionate about the payments industry and its potential.
So Adrian, I can think about three, maybe four reasons. I think at HSBC and before at Google, we really started to think about banking and what we'd call the primitives in tech. We call the primitives of the building blocks of banking, and I think there are five. It's about seeing your money, moving your money, borrowing your money, growing your money, and protecting your money. You could be a business, you could be an individual, you could be an MNC. In the end, you're trying to do all those five primitives. Um, those are roughly in the mix of frequency of use and social and economic benefit. The payments industry is the purveyor of the second one, moving your money.
Mm.
And that in itself is important, but I think more extensively, I think it's an enabler for the other ones. So it's an enabler for borrowing. We'll talk maybe
Yes.
more about that. It's an enabler for growing your money or wealth creation, and it's an enabler for protecting your money or insurance. So those two reasons. The third is I love history as much as I love technology, and if you indulge me, I think it's one of the most dynamic primitives over history. In fact, I've been toying around with this idea. I might write a blog about it, about the Moore's law of money. Moore's
Okay.
law, of course, famous for doubling compute every 2 years. Payments, if you take the long arc of time, 2,000 years it took for cowrie shells to become paper money.
Yeah.
1,000 years after that, from paper money to cards. And then we've had cards for less than 100 years, like I think it's
Yes.
60 to 70 years.
Yeah.
And we've had crypto for even, about 10 years. So if you think about the long arc of time, payments continues to evolve. As much as rich as the history is, the future is as
Mm.
exciting about payments. And I think the last thing is about sort of higher purpose. I think payments makes money more inclusive. I saw this
Yes.
firsthand at Google. It makes it fast, it makes it secure, it makes it inexpensive. You just look at what national rails have done in countries like China, India, Kenya, even here in Singapore, where I'm speaking to you from. So the privilege to sort of play a small part
Mm.
in each of those revolutions, that's the kind of stuff that I could tell my grandkids about one day.
Wonderful, wonderful. It's amazing because we love having people on the show. We're very purpose driven, and our guests typically see the higher purpose and a chance for payments ecosystem to be far more inclusive for the underbanked and the banked. So that's wonderful to hear that you're aligned with that. So I wonder if you could share a little bit as well. I thought if we could delve into embedded finance, because the headlines have really come from the applications in the business to consumer space
Yeah.
within embedded finance. Yet I sense a far greater opportunity within the business to business and enterprise space that we've yet to see the impact of. I wonder if you could share your lens with us on that.
Yeah, I think the short answer is on the business to business space, there's tons of opportunities, both in terms of, and you're absolutely right on retail payments.
Yeah.
Um, I think the opportunities are in two blocks. First is, to catch up with the progress made in retail payments. And then the second one around this is to address some of the unique challenges around B2B payments.
Okay.
Um, there's so many, for brevity's sake, let me just pick, let's say one, right?
Okay.
Um, I think the link between data and payments, that binding link is something of phenomenal potential opportunities. Over the last 50 years, whether it's Visa, MasterCard, others like Swift, National Rails, we just talked about, they've built a mind-boggling network
Mm.
to facilitate payments between, businesses from Tokyo to Timbuktu,
Yeah.
right? Um, that has served retail incredibly well, large businesses somewhat well, and small businesses quite poorly so far.
Yes. Yeah.
In
Yeah.
fact, the small businesses are the ones that bear the weight of this. To unlock that scale, they had to create something called interchange, as you and I know.
Yeah. Yeah.
And quite frankly, an interchange is a genius construct. It allows multiple players on a value chain to all be rewarded, and that
Yeah.
unlocks the value of it, right? Um, but what if we saw these rails enhanced to allow for true and free exchange of data in a way that has consent, reusability, and commercialization, all the stuff you saw on regular payments, consent, reusability, and commercialization, all baked into the same rails that move money.
Okay.
I reckon this, let's call it new interchange, could be as transformative. It would not only address, the data that it carried along with the payments would not only address the subvention of thinning margins of the payment providers, but it could launch an armada of new and useful products for small businesses to individuals. An example of this is like a merchant could actually see that, if you go to walk into a merchant, that payment till for the merchant is a cost center. That could
Yes.
become a revenue center. It could become a new business generator with, dynamic contextual offers. We were playing around with that at Google. I'm sure Apple is. How do you take surplus capacities in stores and be able to put it through the network and allow people to actually monetize that and get traffic, and be
Okay.
able to get new business? So embedding those kind of capabilities, I think, will turbocharge opportunities. It'll also allow for the launch of programmable or purpose-based money,
Mm.
which
Mm.
allows for, again, I know three things, right? Automation. It allows for automation, let's say flexibility. Imagine all of your subscriptions, Netflix, your phone bills, all automated with predefined conditions. It
Yeah.
allows them to be restricted and controlled, and you have precise control over the payments. I have two teenagers. The ability to control the payments that go through their hands, quite frankly, I'd pay for that.
You
And
and me
then,
both. Yeah.
yeah, and then, Adrian, efficiency and compliance. Imagine governments or companies that could streamline and have real-time compliance. Those, I think 5 years ago that was all a pipe dream, but the advances in compute and AI, um, they are sort of making the only constraint the, you know creation of this new interchange and its players. So I think payments, with embedded, can go from not just being about instant, integrated, and inexpensive, but I think
That's
it
really
can
nice.
go
Yeah.
to being insightful,
Okay.
and I think that's super exciting.
Okay, so you see the insightful as a sort of that's the far-reaching one out of the three eyes on embedded finance. I wonder if we could just go in a little bit deeper there. In terms of, if we to take an example, again, particularly the
Yep.
small to medium enterprise companies, whether it's consulting or whether it's a service-led business, or even the travel space, etc., where could you see a use case where that could actually, as you say, turn a cost center into a profit center or a revenue generating center? Just wonder if you give a little bit more nuance on that for us.
So let's take an example of a coffee shop, right? I don't know if maybe that's too small an example, right? But if you've got a larger example of a travel company,
Yep,
um,
yep.
um, they the ability for you're paying down that travel. That travel company can pair with an insurance company. You can collect the payments for you for your insurance, not only cross sell you an insurance, but allow you to pay that because it's created the payments primitive from you with you for that individual travel journey. My wife's just booking a trip. you know, it allows you to bundle capability together and
Okay.
collect capability in a seamless kind of way.
Okay.
So that's a sort of a very simplistic use case of embedded. The one that I'm talking about, the more complex one, is that saying that, you know, you could push out capability, let's say to Google Pay or Apple Pay, and say,
Mm.
you know, people in a store saying, look, I have nobody in my, I have like capacity in my store is really low. I'm willing to drop prices for the next 2 hours if anybody walks into this store.
Wow.
And you use the rails to push that message out. It goes out to people who have exhibited an interest in that area and
Okay.
are,
Yeah. Yeah. Yeah.
around that store. So if you like, if you like a beer at your favorite pub and it's running at half price, you might take, you might slope off from lunch and go and get one, right? So, so that can be powered by, I think, those rails working together.
So this is the translation of using data to be insights are actionable and real and in real time. Yeah.
Correct. Because data today is the side story, right? We're trying to move a payment and we have to provide a bunch of data.
Okay.
One of the most commonly asked requests, for example, that we had at Google was nobody's providing us a DHL type statement for where our money is. So we pay people. We pay people. Let's say
Mm.
Google pays its YouTube creators. It sends the money and it goes into a bank and then it disappears for a period of
Yes.
time and it may or
And
may
it
not
appears.
appear.
Yeah. Yeah.
The treasurer of Google said, "Why can't this work like if DHL can tell me where my package is? Why can't you tell me where my money is?"
Agree. Yeah.
Now, the truth may be it's just stuck at your bank while it sits on the floor, but uh, but uh, but that's the kind of transparency I think
Mm.
that is required.
Wow. Yeah. Yeah. So the applications for that, particularly with cross-border payments, is huge. I know us as a business, we do obviously a lot of work internationally. Over half of our business is international on that front, and there is that moment where the business we're dealing with says, "We've sent you money," and then the
Exactly.
next thing you know, it then appears. There's this sort of void in between. So I think there's again, I knew I'd get pretty excited about embedded finance and its potential. So I think we could be here a
Yeah, but
while. So
it's to your point, right? If somebody said, if I send you, if you buy something on Amazon and it says, it'll get to you in 3 to 5 days, you're like, no, I need to know where it is right now, So
well,
why
yeah.
isn't that true of payments?
Completely agree. And I think what's exciting for me is the possibility of that, giving people control and ownership, I think, and making the whole system far more transparent.
Correct.
I think is again, I think a typical driver within the payments industry. I wonder if we could just switch gears a bit, because I know you're very passionate about working capital and
Yeah.
what particularly that can mean, not just for micro merchants, but it can mean for small to medium enterprises in the sense that, as a small business owner myself, that's the lifeblood. Working capital is the
Yeah.
lifeblood of our business. You were, as you say, privileged to be part of a huge impact that in India, particularly with 150 million users of the
Yeah.
products. Tell us about that use case. That's huge scale. Tell us about that use case.
Yeah. If you don't mind, I'll come back to that because, in a run, I think it sort of punctuates the point. I was just thinking, making to you. Firstly, I am really passionate about working capital, or as my team said, you're crushing on working capital,
Yeah.
in a sort of Gen Alpha kind of way. But look, I think it's the evolution of my first love, which is the internet. Let me explain. I think if you're an entrepreneur, you are one, right? Sometimes most of the entrepreneurs I've talked to, the first type of working capital they used was a credit card,
Yeah.
which PS is a payment device, right? So,
Yeah.
so the reality all over the world is that it's really, really hard for first-time business owners to get credit, even
Yeah.
second-time or third-time business owners. And the reason it's hard is because banks are heavily skewed towards scoring credit based on data that is historic, static, and restricted, basically to your financial disclosures and your bureau scores. And often they're really dependent on collateral, right? So that house that you're sitting in, that needs to be collateral, and it's not only is it painful for you, but it's onerous and manual for the bank. Now, what if we could take data as collateral? What if
Mm.
we could take the real-time data that payments has and make that continuously available to the banks that are financing the company, going back to your earlier question, pair that with, of course, the traditional data, but also non-traditional data. And this is something we started exploring at Google. How could we take logistics data? How could we take traffic information around footfall in your market? How could we take Google customer ratings or other ratings? And how do we do that at scale for you so that you are able to, take traditional and non-traditional data and score a customer, particularly a first-time customer. But it doesn't stop there, Adrian. It also is in terms of the repayment. So not only can you now dynamically price your package, so your business is doing really well, your loan your margins fall and you do better. If your business is doing badly, we put in smart covenants. But also when you're paying back, and we started to do this, like for every payment that you receive from a person, you could actually take away a small value and actually start repaying your loans. Google does that and Apple does that with apps. Why couldn't? And so we started exploring how we could do that. I left at that time. We started exploring how we could do that. That micro repayment as opposed to just micro payments. And so that's all happening. That's not to your point. These are real examples. A really important part of this is digital public infrastructure. Because it makes that other information golden source. It makes it both, and when the government supports it, it makes it reliable and it makes it scalable.
Yes.
And so I think we're seeing that in Asia more than we're seeing that in the West.
Okay.
And in markets like India, Singapore, where I am at, Malaysia, there's an incredible growth of just digital public infrastructure. And look, I reckon on the back of this stuff, we're going to get the next, visa of working capital will come from this. It'll be a massive company in the next decade or so. Who knows? It might be Visa itself, and that'll make it $1 trillion company. But I think that is something that small businesses, to your first point, and Google and others can enable. Can demand it, and Google and others can help lubricate that possibility.
Excellent. Yeah, I think the possibilities are there are significant. But I'm fascinated also about the sheer scale, as you say, in particular parts of Asia where there seems to be a very strong collaboration there with the governments. I suppose if you've got 1 billion people or a population of 1 billion people, the chance to have an impact at scale is significant. I know you're very proud and feel very privileged about the work you did there in India. I wonder if you could bring that to life where you had that impact on 150 million merchants.
Yeah. I mean, it was users, the several million merchants as part of that. But look, the credit for that, obviously Google was glad to be a part of that, but the credit for that really was on the infrastructure that was put in place first. It started, for those of your viewers who are familiar with the India digital stack, it started with identity. And then it became about payments. So identity with payments without identity is pointless, right? So they 1 billion people got identity, or thereabouts 800 million people got identity cards, which is incredible to think about it. Like rolling out a national insurance scheme. You and I have grown up in the UK. That would be phenomenally challenging right now. Then delivering 400 million bank accounts, because this is all powered. It's not wallets like it is in other parts of the world like China. This is actually pulling money out of your bank account and moving it to another bank account and using your phone number as the proxy, right? So all of that infrastructure was created by the government. And multiple divisions of the government. It's one of the, I don't think the world knows about this, incredible thing that is happening in India, which is this sort of digital public infrastructure. Today, you can move when you move goods from, let's say you buy pencils and pens behind you, you buy 1,000 pencils and you move them from one city to the other, you input the vehicle's name, and when it passes the city entry, the gantry that is the sort of like the city, that collects the toll, will talk to the tax system, which will talk to the inventory system, which will actually square this all out. That's what I mean by that. Information's all available to in public to people to be able to trade on. That's why I'm so hyper and excited about this. And it's not just, India is happening there. It's happening in Singapore. It's happening in, as I said, Malaysia and Indonesia and other places like that, different paces. And of course, it's happened in China at huge scale, but it's happened in China, ironically, by public enterprises like private companies.
Yeah, brilliant. Yeah. Yeah, I just think that's just such a just the scale of what you're talking about. Say we've grown up in the UK, and imagine just overnight having to roll out 60 million national insurance cards, let alone 800 million,
Yeah.
and the subsequent bank accounts to that and a flow of money. That's scale, that's complexity, and frankly, there's a we need robust infrastructure to make that happen, and a lot can go wrong. Yeah.
You know, you take the United States. I went to college there, and I used to look up. Growing up as a kid, I used to look up to the U.S. as like this incredible infrastructure
Mm-hmm.
sort of fairy tale story, right? But today they still don't have instant infrastructure. Fed now. Some people joke Fed later. Is
Taking its
still
time, isn't
not
it? Yeah,
live,
yeah,
right? I mean, whereas billions of people in Asia are sending money to their moms and their
yeah.
caregivers, and so I think there's a lesson from east to west on that to be taken.
Yeah, I can only echo that. In some of my experience doing quite a lot of work in the Middle East, where
Yeah.
what one company or one exec in a company qualified to me and just said, actually, do you know what? When you're starting with no infrastructure and not having to build on a massive legacy stack, it actually can be easier to start it all over again because you started with the mobile generation. But that's where your tech is going in. We're not trying to unpick. However, it's going to come back to something I know you and I are very, but I think it does start with mindset
Yeah.
of possibility. So I wonder if we could go into that in a bit more detail, because I suppose there's so many levels here at a country level mindset. But I think you and I really do agree the fact that there's a strong link between mindset, even in the technology space, between mindset, productivity.
Yeah.
What do you see as the link between mindset, operating culture, and the productivity of an organization? Because you've worked at different size
Yeah.
organizations and different parts of the ecosystem.
So as you and I talked about before in the run up to this, this is something that I'm very, very passionate about. You and I are both passionate about. So I'll start with the story and end with the framework on this one. I When I left Google to join HSBC, I was most worried about the legacy technology and the
Okay.
mountain of technology debt I would get. I knew from experience, having worked in banking before, that I'd have uh, you know mindset and operating hills to climb, right? But the reality that I realized after, once I was there, was that it was the other way around.
Okay.
Yes, technology, and it was a challenge, but it was not as big a challenge as mindset. And so let me give you a really pithy example. Um, when I moved across, I dreaded. I had gotten used to this collaborative work tools of Google. I was 10x more efficient with all my Google tools, and I walked into office and I was pleasantly surprised. It was the first time I saw Microsoft 365, 4 years ago. And I was like, shit, I'm going back in the past. And I started playing around with Microsoft 365, looking at the features, and it had everything I wanted: collaborating docs, communication
Yeah,
on
yeah, yeah.
Teams, storing stuff on OneDrive. So I was like, oh, relief. Uh, but that honeymoon was super short lasted because I discovered half of the capabilities had been grayed out or switched off and available to some teams and not the other teams of mine, not only just the whole bank. But the bigger problem was teams didn't have that culture of using it. So
Mm.
people were sending attachments to each other, which felt like, snail mail coming back from Google. They were lost when they were asked to collaborate on a document, and they couldn't use chat. They would send emails, right? So I got very passionate about it. We changed that behavior in my team over the 18 months, but we weren't able to change that across the bank. And the example illustrates a broader point, which is that I think old economy firms, Adrian, are understandably fixated on this sprint to solve for modernization of their tech stack. And there's a proverbial pot of gold at that, which is new customers, new revenues, cost savings. Every consultant worth their shirt is selling you that story. But I think we're making a mistake. Solving for tech without solving for mindset is
Yes.
like, paying for the spacecraft, but not training the
Yeah,
astronauts,
agree. Agree.
right? It's probably a topical. Boeing's probably got that the other way around. But I think it comes down to ritual. I think it comes down to process. I spend a lot of time on that personally with my teams. And I think there are three kinds of process and ritual. There's the new, which is there are new practices, new disciplines that you need to
Mm.
adopt. Product management that comes from the technology world, treating engineering as at parity with the business. These are sacrosanct to building great products and
Yes.
capabilities. There's the new old stuff, which is saying old capabilities that we need, but with a new approach. So let's talk about empowering people, empowering your teams, taking healthy risk with your teams, and building a culture of healthy risk. I find that that's kind of evaporated.
Mm.
And you don't have to do that, blindsided. You can do that with modern tools. You can stage gate that. You can input processes in place to do that. And then there's the old gold, which is actually bringing back stuff that old economy companies used to do but have abandoned in the last 2 decades in the chase of shareholder profit, right? Having patient capital, having lower churn in your team because you take care of them. And most importantly for me is building a culture of ownership, not just compliance. Don't get me wrong, compliance is important. I work still in financial services, but own the problem,
Yeah.
right? And I think so. If you think about it, what it all boils down to is the rub on this is that you need an honest feedback loop, and you
Yeah.
need a culture where people are learn-it-alls rather than know-it-alls. And I think that's what it boils down to, really, if put simply.
Wonderful, wonderful. I'm always looking for a headline for the show, for this
Yeah,
episode, and I think is developing a culture of learn-it-alls rather than know-it-alls might well
yeah.
be that. But
Well,
but there was,
that's Satya Nadella's term. Due credit to him. Yeah,
yeah, absolutely, absolutely. But I think that's sort of, I wonder if we could just go a bit deeper there. Though you mentioned a term that you're the only person I've ever used this before, but I think it was presented to you at interview before you went to HSBC, which was what's your patient capital?
yeah.
So I wonder if you could tell me what your definition is of that, why it's important, and why it's important. Well, and also how do you grow it? How do you grow your patient capital?
Um, I think before, you and I also talked about mission and purpose-driven companies,
Yeah.
right? You don't get patient capital if you don't have a mission or a purpose,
Mm.
right? So if you are if you are task oriented, your capital here's what most companies today are. They're task oriented, trying to meet near term, like quarterly task
Yeah.
targets, and therefore they deploy capital in a sort of feast and famine kind of way, and then they're surprised that they don't change the world, right? I think the great companies of the world through time have always had a mission or purpose that they have conviction about. And I think the big word here is conviction. So once you have conviction, then you are able to allocate capital patiently to that. That doesn't mean you throw all the capital to
Yeah.
that, right? I remember a story of credit cards when they first came into Asia. Rana Talwar, who was our CEO at Standard Chartered, was sort of responsible for bringing cards to Asia. And somebody went up to him. I'll keep his name anonymous. He went up to him and said, "Here's the plan for India, and I want, let's say, $100 million, right, to deliver this plan." And he said to him, "What can you do for $10 million?" And he said, "Well, for $10 million, I'll have to come back to you." And he's like, "All right." He came back, robust plan, etc. He said, "All right, you've got your $1 million, but I've also given you 9 more if you hit your $1 million in 70% of the time that you got." Guess what? They went hell for leather. They launched cards. They hit their targets, and they got $10 million. Right? We today start with $10 million and end up with $1 million budgets. And guess
Yeah.
what? We're not reinventing the wheel. So I think that I don't know if that answers your question. That's
Yeah.
the powerful thing.
Brilliant. Love it. Love it. No, it's really interesting as well. And I know I think the term that you've used before as well is that actually having the right mindset is so vital because there's a direct impact on performance. And especially in the payment space, I suppose thinking about why not rather than why. Those
Correct.
those two, and I wonder if you could tell us a little bit about your experience of what we can do when we hear why not compared to when we only hear whys.
Yeah, that was my life at Google because, in a tech company, like not everything's fantastic about tech companies as well, right? I mean, there's almost like a, why not, why not, why not, why not culture. Like, because it's regulation, man. You can't do it.
Yeah,
It's
yeah,
like, how do we change that? it's that engineering mindset I talked about. The engineering mindset is continuously curious. It's kind of, I'll tell you an anecdote. A lady from Standard Chartered, who was one of our PAs there, she came across to Google and she said something insightful to me. She said, when you meet a bank executive, in their 40s or 50s, you'd never know who they were as a child. When you meet somebody at Google, it's absolutely clear what kind of kid they were. Because they really haven't grown up. They've still got that, why not culture. So I think there's a bit of growing up to do for technology companies, and we're seeing that. But there's also, we need a little bit of Benjamin Button kind of phenomena in banks, and just be a little bit more, less driven by why should I do this, right? And I think incentives are a big thing to, incentives are a big role to play. Regulation is a big role to play. GFC burnt a lot of people, a generation of bankers very, very badly. You still see great names. You look at Jamie Dimon, a phenomenal risk taker. But there are not many people like him who lead banks today.
Yeah, yeah. Excellent. Yeah, no, it's so important. And as you say, it strikes me as a balance as well, because there is a point where we've got to stop saying why not, and we do have to answer the why. And like as you say, we're in a regulated space, and there's lots of things in there, and not all dollars are equal. They have different risks attached to them. There's a balance and an optimal balance to be struck there.
And that, Adrian, was why I wanted to come back to banking. I wanted to come back to ask why not more. I felt that when I was there last time, I didn't ask enough, because every time I asked why not, we did something. Okay. Why not push the envelope a little bit further? But I realized when I came back after 7 or 8 years, I realized there were a lot more people asking why than why not. There was no why nots. I was like a lone voice in there.
Yeah. Okay, yeah, I can hear that one. I can hear that one. So looking towards the future, where do you see as the significant opportunities? Because again, there seems to be always another new technology in payments, almost on a quarterly basis. And where do you see I suppose, the winning strategies that are going to be adopted over the next 18 months within the payments industry, and those global impacts and not just the regional impacts?
So Adrian, I'm not a big fan of predicting stuff because you invariably prove yourself wrong, or as they say, economists can be right. Oh, no, twice like clocks, like twice a day. But if I borrow from sort of Bill Gates, who I think he says something really clairvoyant, which is that we tend to overestimate what's happening in the next 2 years and underestimate what's happening in 10 years. I'm not going to talk about AI much, but that's a great example of that. So if I extend your question, so let's take the medium, if you allow me to talk about the medium term instead of just 1 or 2 years, right? I think there are 5 P's. I love a good framework, as you know. There are 5 P's that are going to drive payments going forward, and money. The first is portability. I think portability, and by the way, none of the first 4 are revolutionary. So, I'll blow my thunder there. But they are all going to sort of pick up pace. So portability is about we've got super apps, wallets, super wallets. I think the Apple Pays, Google Pays, WeChats, Ali's, and some of the local examples of that, those are going to really, they've got escape velocity. They are going to really scale, hyperscale. And that will allow them to dominate the whole move to contactless payments. I think plastic in 5 years' time is dead for all intensive matters. Retail embedded payments, as we talked about, will really become seamless. So, we talked about use cases. You start in your app, you start on a website, you end on your app, you can go into another, it will be in the whole payment process. You could book a hotel, you could book with somebody, you could book a flight with somebody else, and it all sort of links together. And I think that connected banking experience, even before embedded, and we could do another section on that, will be real and it'll take off. So portability. The next is pace. I think instant payments, barring the US and a few other places, instant payments is sort of, domestically everywhere. I believe in the next 5 years, we're going to see real traction around international instant payments. And the driver of that is going to be these national payment schemes that are starting to link up to each other, right? I can pay a merchant in India in a QR code, like 1 or 2 rupees with my Singapore bank account. Because the 2 systems are talking to each other. So pace is going to take off. Price will continue to decrease. I'm hopeful and I think it will, for small businesses. I think small businesses still pay a big price, like you, for
Mhm.
payments. Large companies can negotiate
Yes.
because of their scale. Retail can negotiate because they have their collector scale. It's the small companies, the small businesses that get screwed. I think that'll improve. And then lastly, privacy. I think biometrics will
Mm.
really become the standard. It won't be opt-in; it'll be opt-out. So I think there'll be a lot more comfort around the security of these payments. So portability, pace, price, and privacy. I think the trends. If you go a little bit further, we talked about programmable money. I think, I'll say it here. I think with AI and compute, the way it's going, I don't think that's going to happen in 2 years, but in 5 years or 7 years, I do think countries will start to show that, and they will start to show that where they're giving out, disbursements to their citizens and things like that. It'll first happen in sort of intergovernment payments, I think.
Right. Right. Well, thank you. Thank you.
But as I said, I may be wrong in all of these things. One thing, sorry, one thing I didn't talk about was crypto.
Yep.
I thought about this. I didn't want to make a prediction on it because I think it's too reliant on on elections and regulators and how they all
Yes.
interact. So, you know, anything I say on crypto will be, with the highest fudge factor. So I didn't bother.
No, and thank you. I'm pleased you didn't ignore it, but at the same time, I'm with you on that one. I think it's to say it's an uncertain marketplace, I think is an understatement. So, Aman, this is where I normally sort of try and bring together the sort of three or four most salient points here and just summarize our conversation. But I've got pages of notes here that I've sort of taken and absorbed. I wonder if I could just relay some of the most prominent and insightful elements. Would that be okay?
Please, that'd be great.
So, first of all, thank you very much indeed for for a very insightful conversation. I think one of the things that struck me first of all was the ability that you've had to use the different lenses you have across the ecosystem and apply them in different spaces and new environments, recognizing the differences those, but actually what can be learned from those. I think you've sort of confirmed something that I thought, which was that we're only seeing the start in embedded finance, and actually the B2B component of that could be even greater than what we've already witnessed in terms of seamless and integrated, and also how that's instant. The next stage of that being insightful, and how we can actually use excess capacity at various points to signal to the rest of the market, that could be a game changer for
Yep.
organizations. I think the piece for me about working capital and the fact that small to medium businesses are going to be more recognized, because that's a highly underserviced marketplace, as we well know. But also the sheer, what's blown my mind is the sheer scale when you talked about 800 million national insurance identity being the crux of payments, and how important that is, and also how important collaboration is. Nobody does anything on their own in payments, and when you have a government initiative like that, just how much is possible. um, I think the big one though for me really stood out about mindset.
Yep.
Mindset at an individual level, at a team level, at a company level, and also a country level. What's possible when we're asking balanced and an optimal balance between why nots and whys, and looking at possibilities, yet realizing the potential to do this. But the damaging effect of only staying exactly where we are, I think that was, but it has a significant impact on performance. So I think the other thing that really struck me there as well was, and one of the big takeaways from me was, payments has been all what you just mentioned about the sort of five P's across there. Payments has become a headline. Previously sort of very much an industry in the background. It's attracting great talent, and you see no abetting of that, with portability, with price being driven further down to remove friction. So they were my key takeaways from our conversation. Would you add anything else?
Um, So I'd say that your viewers could probably jump to 45 minutes and get the summary. Yeah, that was brilliant summary, and save my diatribe. I'd say one thing, because what I've realized about payments is it's about people coming together. We talked about
Yes.
interchange. It's about people coming together to innovate, and that's super powerful. And when we do that, I'm reminded of this. It's attributed an African term, which a phrase, which is that if you want to go fast, go alone, but if you want to go far, go together. I think payments, whenever it's trying to go fast and it's broken, somebody or the others try to break away and do it alone. I think the future is about going together, and it's just that configuration of who goes is changing between fintechs, big tech, startup neobanks, and then the traditional bank players. But I think we're ready for the new team to take it forward.
Well, thank you. I really appreciate your insights today. I think that's a wonderful place to end the recording, because I think payments is about collaboration, and it's vital that we do go together, because actually we'll make more progress. Thank you very much indeed.
Cheers, Adrian.